All right, what is up, everybody? Welcome to another real estate wholesaling analysis episode. My name is Elton, like Elton John. I'll be your host for today on this. I think we're on episode 30 or 31st, something like that. Welcome to like another episode where we analyze some real estate deals, some on-market deals, but we also break down how to go through like the steps of what makes a deal work, some of the things that you should be looking into if you're looking into like real estate wholesaling in the business of real estate wholesaling, because it is a business first and foremost. And again, we're going to be analyzing some deals. If you happen to have an address, then by all means drop the address in the chat. But if there's no addresses, then I'll select my own random markets and then look for some properties that are on the market. And again, I'll be pointing out some things on how to analyze some deals in terms of like real estate wholesaling as well too. Literally this business and all business of real estate and just any business overall from all industries require for you to take action. So if you're the person who's ready to take action or ready to get out there and are really serious on making this business a reality so that way you can have a different lifestyle, then by all means it's all about taking action. Don't just study, don't just spend the time learning. You literally have to take action. So that is note number one. Take action right away because it is very competitive of a business, and you definitely have to be ready for that. But if you're new here, other than that, if you're happy to be new here, welcome. Thank you for joining us on today. This series happens every Monday, Wednesday, and Friday, 6 p.m. Pacific Standard Time, with the exception of some days. It's always going to be happening a little bit earlier than usual. Again, it just goes based on my schedule, but most of the time it does go in its regular schedule. But today, Monday, March 11th, we did have to go a little bit earlier. So again, thank you for joining. Other than that, if you guys are ready to get it started, I want to dive into it. Oh, just a little bit of background about me. Sorry, I forgot about that. A little bit of background about me is my name is Elton. I've been wholesaling for the last 11 months. In some out-of-state market areas. And additionally, too, my background beyond just real estate overall, because I only have like 11 months of experience in real estate. It's been mainly in sales and marketing. So when it comes to like sales, it's just communicating, asking questions, building relationships, and that's what this business is about as well too. In terms of real estate, it's the same concept. And so for me, it's really easy to communicate with anybody and everybody, sellers, agents, contractors, whoever it is that I need to talk to. It's just, and I'm always asking questions. So again, it's really easy for me to get into it. If you don't have any sales experience, it is perfectly fine. Don't worry about it. Even if you're an introvert, it is perfectly fine. It is not supposed to be a pristine business where you have to be 100% accurate. You have to be 100% professional. No, this business, it's literally open for all levels of experiences from beginners all the way up to 20, 30, 50, 60 years of experiences of real estate investors, agents, contractors, wherever it is that is in terms of like real estate. Again, it's open to everybody. But again, all those people that have some experience, it's all about the taking action. So again, going back to that taking action, note number one, definitely take action and take action as quickly as possible. All right. So again, don't worry if you happen to be new. It's just be open-minded, learn, annotate things, repeat the learning, teach it to like somebody else, but don't forget to take action. Now, if you're ready for that, then I'm gonna take action and go to the next slide off the bat. So knowing about real estate, wholesaling, just overall like the business, it does require quite a amount of steps to achieve your real estate wholesaling deal. The main concept that we're going to be focusing on this series is mainly just about where the offer should be aligning, what makes like a deal, and of course, once you're able to analyze that, where should your offers be where should your offers be coming in there. Not only I teach how you should be analyzing some of these deals in terms of like wholesaling, but before I even put myself into that position, I put myself first into actually being like the buyer into the having a buyer's mindset or an investor's mindset, so I can understand if this is going to be a deal. If I were to invest on this deal, how would I do things? How much would I do in terms of like repairs, roughly? Is this like actually something that I want to jump into or no? And so that's the mindset that I really try to emphasize a lot in these series, is putting yourself to actually being the end buyer and put yourself, should I buy this for myself or should I not buy this myself? And of course, if once you're able to understand that side of the investor, then if you want to submit an offer on any of your deals, then by all means submit like an offer. But again, at the end of the day, it really has to make sense like on your side. And don't worry about it, because part of the process of analyzing deals is there are thousands and thousands and millions of investors in real estate out there, where honestly and that comes even down to like homeowners as well too. So homeowners just buy one house and live in that house for the rest of their lives. Those are investors themselves. It's just their property is their first and only investment, and maybe down the line, whenever they want to downsize or they just want to get rid of the property for whatever reasons, that's them getting rid of that investment and then doing as they please with that money. So literally all humans are basically investors. It's just some of them have a little bit more capital than others, and then again, it just depends on what kind of business they're in overall. But the very first fundamental we have to understand about analyzing some deals is called ARV, or after repair value. And what after repair value? It literally says it in the word, what the property's value will be once it gets fully repaired. Going back to all investors across the globe, all investors are going to be calculating their and doing their due diligence very differently from one another. And the reason why is because they understand the market, they understand where the numbers, once you start submitting hundreds and hundreds of offers, you start kind of like averaging it out where you should be buying and where you should be selling. And of course, there's going to be some market fluctuations because of interest rates, because of inflation, because of presidential elections, because of weather conditions. So literally, there's a bunch of fundamentals that will there's a bunch of factors that will make some price adjustments, but overall you gotta adjust your prices based on those factors, but it's not gonna be a significant thing unless again you're getting like a big deal. But the very first thing all investors are want to know in a property, when it comes to like investors are going to be fixing and flipping or maybe doing some rentals, is ARV is going to be the number one thing they want to understand. Then the following, it literally varies on the rest on how they want to do things. Some of them like to go with the investing rule. Some of them like to go with repairs first. Some of them have like some other different formula. And then they start getting into like the more detailed stuff, or like the repairs, if there's any profit, wholesaling, closing fees, holding periods. So those all these factors are going to be coming in into like the play of analyzing or into like their formulas. But again, doesn't really matter. How the rest follows is the very first thing is they want to know is that definitely the ARV. Now, then one of the next fundamentals that we do have to understand is definitely the repairs. Yeah, definitely want to go a little bit more repairs. But the thing is with this, because you're not going to be the actual end buyer at the end of the day, you don't have to get down to the specific dollar. And when it comes to investors, it's never down to the specific dollar, because there's always going to be a an extra expense or an extra thing that is going to be happening in the property. Or sometimes you might get away like with less in some cases, where the prices of the repairs are going to be very differently. It's never going to be down to the same dollar whatsoever in any given deal. So that's what I like about repair costs, is I don't like to spend a lot of time in repair costs. I like to stick to average repair costs, which are going to be the following over here. First things first is going to be the live repairs. Live repairs are going to be more on the spectrum of properties that are being rented out, or even just units that are being rented out, where the repairs are going to be very minimal. It's only going to be a quick paint, just retouch up everything, cleaning up, and also maybe change the carpet, or maybe even take out the carpet and put luxury vinyl plank or LVP flooring into the unit or into the home. Next, we gonna head over to which those light repairs are gonna be between $10 to $20 per square foot. Next is gonna be average repairs. Average repairs, this is where we start getting more into like those project homes. So whenever you're reaching out to like sellers or agents or whoever it is that you're reaching out to, or however it is that you're getting your outbound and your inbound leads, when you're looking for properties that are more fix and flip, then now these are the properties that are going to take a little bit more capital for those fix and flip invest properties whatsoever. But you start getting more into like project type of properties that require a flooring updates, a kitchen updates, a bathroom updates. Those are the three main areas. Now you start getting to like more details like painting, maybe windows, doors, possibly the roof, possibly the utilities, maybe the HVAC, the water heater, maybe some plumbing as well too, some landscaping. So little things start adding up into it. It really depends on what exactly you want to do at the end of the day. But these are going to be more of those project type of properties that require some time. Usually these are going to be varying between 2 to like 6 months, again depending on the size of the property and what kind of a fix and flip project you're trying to make out of it. Now the next one, this one's gonna, oh, and the average repairs are gonna be between $25 to $40 per square foot. Again, just average repairs nationwide. Next, we're gonna have some repair costs that are gonna be more in the gut job repairs. These gut job repairs are going to be a full gutted, fully get everything stripped down to like the studs type of properties that are going to be mainly just pretty much doing the whole work on a subject property, taking down the walls, putting a brand new kitchen, flooring. Now this one, sometimes you're gonna come across some properties that you have to demolish the entire property, so take it all the way down. Those ones are gonna be mainly like a lot of Midwest properties. If you happen to be investing in some Midwest properties. But occasionally you probably have some in some in bigger states as well too. But this is going to be a complete strip down and start all over type of home. So you're kind of like building a brand new home, but you're actually not building the brand new home because you don't have to do the foundation all over again. Maybe the foundation has some cracks, so maybe it has to be retouched up, which is going to get more expensive. But again, it's called Gudja because it just needs a complete update. What there whatsoever. The average dollars per square foot on these are going to be $45 to $60 per square foot. Going back to the list of all the repairs, there are some states that are very expensive, like California is definitely very expensive. Texas, Florida, New York, Massachusetts, Washington, maybe Arizona as well too. There's some states where it just it's going to be a little bit more expensive. Usually, when it comes to like those states, I like to add 15 to $20 more per square foot based on these averages, just because again either the materials are going to be the same, it's just going to be the labor is going to be more expensive than any other market whatsoever. It's just because those states are very expensive overall, especially like in the Silicon Valley, San Francisco Bay Area, Los Angeles, again part of California is the bigger cities, Miami in Florida, Texas, it could be Dallas, it could be it could also be in New York as well too. So again, it just depends on those bigger states. But again, as a safety net, just add 15 to $20 more per square foot on those states. Now, the next step is once we're able to find the ARV, we're able to find out the estimated repairs. Part of the a part of the process of finding the ARV is looking for similar homes, and again, looking for similar homes that have been fully updated. And occasionally it's always good to like seeing how the condition of the properties that are recently selling as well too, so that we can get like a sense of how much properties that don't have any updates, completely ugly ones, are going for, so you can understand what that market is, because the market before updating it is one market, and the market after fully updating it is a whole different market as well too. So those are going to be two different markets to understand. But to find what the new market is for fully updated homes, we have to go through some parameters and make sure that we're looking for apples to apples, and these apples to apples have to we're going to be sticking with certain parameters. First things first is going to be the living space. Let's say as an example, you're looking at a 1400 square foot home. You got to go plus or minus 300. So 1400 plus 300, 1700, and all the way down to like 1100. So 1100 to 1700, you're going to be looking for some comps with between that range. Lot size. This is going to be varying depending on properties that have more on the acres. So a quarter of an acre, half an acre, 1, 2, 3, 10, 8, 40 acres. That's where you want to start comparing acres to acres. So you have to involve the lot size. But if you're looking at properties that are just like single family homes and they just have like a small gardening area, you don't have to worry about the square footage of the lot. Next is when we're looking for similar homes, you can go half mile to a 1 mile, maybe even 2 miles of a radius. The only thing that's going to be affecting this radius is some major roads, or what I like to call double yellow line roads. And what these double yellow line roads look like, they're basically high traffic roads with buses, commuters in the morning and afternoon. There's going to be delivery trucks, construction trucks, semi trucks as well too. So it's just going to be a constant flow of traffic happening on this major road, where it leads to like highways, freeways, just major roads again, where it's just constantly busy. Where what's happening with these roads is basically splitting up the neighborhoods. So one side is going to be one neighborhood, and the other side is going to be a whole different neighborhood whatsoever. Even if the properties might be the same, again, that major road or double yellow line road is basically splitting them up. And an appraiser, whenever they're going to be appraising the home at the new value, once it gets fully updated, they're not going to be looking at those two separate the two neighborhoods, because again, they are literally two separate neighborhoods getting split up by a major road. And looking into these comps as well too, you want to make sure you find three updated properties, 3 to 5 of them. Again, you can also add some properties that have not gotten any updates, so that way you can understand what the current market is in terms of those properties that don't have any updates. Because again, one side of no updates is one market, one side with updated homes, it's a whole different market as well too. And the last thing is make sure that you stick within the same years of a property. Don't use as an example is a brand new constructed home, 2024 new built home. You can't compare that to a 1963 home, because again, the materials, the labor, everything is just pretty much very different from one another. So you want to make sure that you're comparing again apples to apples, so stick within the same years or plus or minus 10 years to that case. Next, we're gonna be going through a breakdown on how to like understand like an investor's breakdown, what makes like a deal. So again, I want to make sure that you're putting yourself into that mindset of to think as an investor for yourself, and then afterwards think about in terms of like wholesaling, put your wholesale fee, and make sure your contract says and or assigns, and additionally to what are the other terms you're putting into like the deal. Part of the process that's going to help us understand this is going to be keeping a track of like all your properties, people, and everything into like a CRM. So I designed my own tools to help me expedite my analyzing process. One of them is the fix and flip, or aka the ARV calculator. Then there's the complete rental calculator. There's a creative finance one coming soon, or I think it might be already released. And of course, we're going to be using some free platforms like Redfin, PropWire, Zillow, Realtor.com, so that we'll be able to look into some deals that are happening out there right now. So with that being said, let's dive into this really quick. So let's head over here. Let me pull the spin the wheel really quick. So that way I can select the random city over here. So that way I can know in advance where we got Spokane, Washington. Awesome. Okay, so let's go understand like the breakdown first of an investor. So the investor perspective over here, I'm gonna use this Google sheet that I created to help me expedite like the process. Actually, I should have the PDF. Let me look for the PDF. Um, Seller finance. Now, let me look for this. I should have the PDF. Where did the PDF go? Investor. Oh, here we go. Investor strategy. All right, cool. Here it is. This and same thing with the Google Sheets calculator. It's the same thing. It's just that one does the calculations for you a little bit faster. But here, let's go through this example off the bat. So off the bat, we have this example right over here where we're looking into an investor strategy. So the very first strategy we're going to be looking into is going to be what's called the 70% rule, which a lot of you probably already know about it from investors. When we're looking into what's going on with this? Oh, let's see here. All right, cool. So the 70% strategy, this is from like investors. It's a common strategy that they use to calculate a lot of their deals. So very first thing we have to understand is, again, let's go into the steps. So first things first is we got to look for a property. So we have to find a seller. Let's go with this. Why isn't this freeing? I don't know what's going on here. What's going on with this little pencil thing? All right, cool. Here we go. All right. So first things first is a 70% strategy. But the very first thing we have to understand is we have to come across a property. So step number one is finding a property where the seller is going to be asking a specific price that they want for like their property. Once we get like at the price of the property. Let's say we found a property where the seller's looking to get $764,000 for this deal. All right, cool. We have to find out first that how much they're asking. Of course, find the motivation. Why is it that they want to sell up the property? Are they trying to like downsize, move, relocate? They want to buy another investment, whatever it is, the motivation is, or aka the X factor they need to move on to like their move from their current situation to like something else. After that, we have to find the repairs. So the repairs is going to be step number two. Find out if you're on the phone with the seller, find out what the condition of the property is, and then seeing roughly how much in terms of repairs it might need, if they happen to know exactly. If they don't, then now it's all about looking at the property in person, so that way you can understand how much the property is going to need from there. Next, after that is we have to find the ARV. With the ARV, we're going to be looking for some comps. Again, we're going to be looking for some similar properties that are selling in the area, both good and bad. So not updated and fully updated. So you can understand both markets. And let's say for this example, we need a total of $80,000 worth of repairs for this property. From the repairs, we're gonna need the ARV happens to be $875,000 for the repair on the property as well too. So then from there, now we got three things. We have the asking price, we have the repairs, and we know what the market is telling us for this property in this area. Now, after finding those three things, now let's start breaking it down so we can understand where the highest offer is going to be as an investor, not as a wholesaler, as an investor. So we subtract both the 875, which is the ARV, minus the $80,000. That's going to give us a new ARV, which is going to be $795,000. From those 795 is where we multiply our ARV. So it's going to be 70%. And what that 70% is going to consist of is going to consist of a couple things. First things first is going to be the profit the potential profit that we could that the investors going to be making on this deal. And then two is going to be closing costs. Again, if I were to be the investor, then I'll be paying the closing costs. So that way I'm able to get my offer, my low offer kind of accepted. Again, it's part of my condition to make it as easy as possible for the seller to move on to like their next step or after selling like this specific property that we're looking into. But then from there, that's what that's going to consist of. So now if you multiply 795 times 70% or 0.70, then we have our first number over here, which is going to be our investor MAO or investor maximal allowable offer. So as an investor, the highest I will pay for this property is going to be $556,500. So um that's gonna be my that's going to be my investment for this property of how much I want to purchase the property for. So that's the most I'm willing to pay for it. Nothing more than that. And of course, always best to get anything less than that. So with that being said, now we have our highest offer. So now as a wholesaler, now you got to put yourself, okay, if my investor is willing to pay the most at 556, I have to make sure I get it less than $556,000. So let's say you definitely negotiated, you find the motivation or the X factor from the seller. Then from there, that's where it's going to lead on to our what you get the property on the contract. So you happen to get the property on the contract for $550,000. From here is you want to do your assignment of sale or contract of assignment. So this is where you want to start promoting your property either on Facebook, or if you have a list of buyers, you start texting, emailing that you have a specific property off market or on market. And then from there, you start selling that property. So you start selling the assignment of that contract for $570,000, which is going to make it a wholesale fee of $20,000. 550 plus 570, 20,000. Now, of course, let's say we happen to find a buyer that is actually interested in purchasing this property and they actually want to take it for 570. They're like, all right, cool. We start, yeah, again, we're going to be paying the closing costs for our seller. So, AKA the end buyer is going to be paying the closing costs. So, the end buyer is going to be paying $55,000 of closing costs, which is going to make it a 10%, which is going to be 5% from the seller, 5% from the buyer. It could be less as well too. I'm just like to keep it as even as possible. So we're gonna be adding three items. We're gonna be adding the assignment of a contract, the closing costs, and the $80,000. So that way we can find out how much is the our investor actually investing into this deal. So if we add these three numbers together over here, the 570, the 55,000 in closing costs, and that 10% and the $80,000 in repairs, then that total is going to equal to $705,000. So that's how much the initial investment is going to be needed from our end buyer. And especially if it's a cash offer, that's how much they're going to need upfront as well too. So just be aware about that. Next is let's start breaking it down. Let's see if that's a great deal for the investor or is not really a great deal for him or her or them as well too. So now let's break it down. So our investor, if you remember earlier, we can resell the property for $875,000. That's the ARV. From the ARV, now the investor has to be paying like the agent fee, then of course closing costs one more time. So the initial investment, the initial profit is going to be $796,000. But now, if you guys remember, how much did the investor initially invest into this deal? Well, the initial investment was $705,000 from this deal. So we subtract those two and our investor actually made $91,250. The projected Investment in the beginning was $159,000, again, based on the 20% profit, but it's slowly after like all the fees, closing costs, and pretty much anything else as well too. It cut into some of his or her or their profit. The actual profit turned out to be 91,250. So now if we implement these numbers into the calculator. Again, the ARV happens to be 875. Sorry, the seller's asking $754,000. Um, let's say the ARV happens to be $850,000. The property needs $80,000 worth of repairs. You got the property under contract for $550,000, but then you resell it for $570,000 for a $20,000 wholesale fee. Then again, our investor invested 705 into this deal. And then we break it down. The ARV is 850. We subtract the repairs. We have our offer right over here as well too, where it should be at. But again, we can see where it was. But we subtract the 850 ARV minus the agent fee minus the closing costs, which gives us a $773,500 profit minus what we initially invested into this deal. Then it gives us that total of 68,000. Oh, sorry. What was it? 875. 875 is our ARV. 875. Messed that up. So 875 is the ARV, subtract all those agents, closing costs, and the all-in initial investment. Again, our investor made $91,250, which is a 10% profit, not a 20% profit. So it cut into half, or an ROI of 12.94, or a margin percentage of 11.48%. So that pretty much breaks it down, because again, first things first we have to get the asking price. After getting the asking price, understand where the market is in terms of like the repairs. After finding repairs, do your due diligence and find 3 to 5 comps in the area, both on the not fixed up and the fixed up side. And after that, look where your offer range should be based on the deal from there. And again, this is where our offer is aligning, and we just have to continue going from there. So hopefully that's help you guys out, like understand where the offer should be at. So this is going to be like your range, but again, you got under contract for $550,000, and you're doing an assignment of five or $20,000, so you are selling the assignment of contract for 570. So it pretty much breaks it down for you to keep it as simple as possible. If you want access to this, just comment down below. Give me the wholesale and investor calc, and I'll DM you, and I'll send you the wholesale and investor calculator completely for free. Or comment in the chat if you want to as well too. But now let's dive into the actual calculators themselves, because again, I did mention that I do have some calculators. You're able to get the calculators at Elton Vargas that slash calculators. So there you go. That's the website, and this is where you're gonna get the calculators at. And then from here, not only gonna have access to the 3 calculators, but also it's also mobile friendly. So if you want to do your calculations on the go, you're able to do that. And of course, you have access to the real estate wholesaling CRM, so you can keep a track of all your people. Which is an example. Oh, here it is. It does pop up. There's the properties, people, opportunities, market research as well too. So you have access to all that as well, as well too. Or if you want to buy just the CRM individually, you're able to do that as well too. But the calculators are pretty much here, and we're gonna be doing some of this in action. So let me go back to the ARV calculator, and let's look for some properties, which I think it was in Washington. What city? Spokane, Washington. So let's look for some properties in Spokane, Washington. Spokane, Washington. Here we go. And let's go on Zillow. Spokane, Washington. All right, let's see what we're able to get. So let's look for some properties over here, and let's look down for specific things. So let me show you guys my best filters. So let's remove some coming soon. Let's look for some single family homes. And I like homes that are at least 1,000 square feet and higher. Other than that, let me go on Zillow. Let me reset all these filters. And definitely let's go for properties that are for sale. And let's deselect all these. And a little quick hack about Zillow is whatever city you're looking into for like wholesaling, the fastest way to get a perspective on what the ARV is on this market that you're looking to wholesale is scroll the way down. Keep scrolling, keep scrolling, keep scrolling on Zillow.com. And then you gotta head over to all these nearby Spokane City homes, and then it's gonna show you some prices. Then it's gonna be some other cities as well too. That's gonna be giving you some other prices. But basically, all of these prices right here on the right side is basically the ARV for the property. So like it looks like a lot of, and this is the average for all of them from good condition to like bad condition, from fully updated to not fully updated. So this is where it's gonna be very, very different. So you want to understand where those stand. But basically, these numbers is the ARV, the potential ARV for our subject properties, whatever city we're looking into. Like I said, it depends. So it looks like different cities are going to be different prices. So you want to have a clue on this. So that's a little quick hack to let you know what the ARV is. So my ARV is, so I can keep it in my head, is going to be $371,000 in Spokane, for Spokane homes, because those are the cities that I'm looking into right now. Um, but let's check out some of these. And of course, let's set the same filters on Zillow. Let's remove coming soon. Let me take away auctions, foreclosures, and new construction homes. And let me look for properties that are at least 1,000 square feet and higher. And shabam, now I got all of these properties. So now let me look for if the average price per square foot is um I mean, sorry, if the ARV in my area is $371,000, um, if I were to buy it at 70% of the ARV, I need to look for properties less than $260,000. So let me go through here and let me set a limit of 200 and set 260. Let's go anything less than $300,000. Same thing on Redfin. Let me look for properties less than $300,000. And then now we have a handful. We have 18 on Redfin, and we have 18, so 18 and 18. Awesome. So now let's start looking through some of these. See what kind of conditions we get. See what kind of shape we're looking into. So this one is 300, not bad. Very light repairs, nothing too crazy. Here's a good one. Needs a carpet change. We need to change the kitchen, painting, bathroom walls. Awesome. I kind of like this one. The reason I like it is because nothing too crazy in terms of it. It's not like a full gut job repair. It's below that 300 was it 371,000, so it's already $100,000 less than the ARV. And also um well, to go, I like how it's very it's already in good shape. Again, it's just gonna be very light repairs, change the carpet, maybe do like a painting, do like a painting um on the kitchen, just get it all like white as well too. Maybe put some granite countertops so that we can make it like a black and white type of home. I really like this already from like the windows. I'm not sure if the windows need to be changed up as well too. If anything, maybe change some of the doors, do some update like in the bathroom with the vanity and also with this glass door and the color of it. So again, it's gonna be like kind of like low average, high light repairs. So let me start putting some information into my calculator. First things first, on the ARV is gonna be the this looks like it's a fix and flip property. So I'm gonna go with like again, I'm thinking as an investor, so fix and flip. And where's it at? It's $265,000. So $265,000. The property is 3 bedroom, 1902 square footage. 3-1. All right, cool. It does look like it has a basement as well too. So let me check out if there's a square footage on the basement. Hasn't covered, target parking, heating, basement, partial and finish. So it doesn't tell me what the size of the doesn't tell me what the size of the basement is. So I'm gonna go with 800 square feet because it's half a basement, so it's not like a full basement from there. And usually with the basements, you want to do like some of that as well too. So again, if we go back to the average repairs are between $10 to $20 per square foot. Washington is one of those states where it is a little bit expensive. Where is this located though? I didn't check that out myself. Let me just look at, I don't know where Spokane, Washington, how far is it from like the city of like Seattle, Washington, or what big city is close to this? Oh, it's closer to Montana. Oh, okay. I did not expect this. So it's kind of like away from, like there's like a big mountain right over here. So wow, okay, okay. It's really close to like Montana. So, and also Canada as well too. Probably like 30 minutes, like 45 minutes from Canada. That's pretty cool. Um, so yeah, it looks like it's a small city, but again, it can go in it's really close to the state of Montana and also to Canada overall. So really great location actually. So I don't think the material that it should be too expensive out here, but I'm gonna play safe just because I don't know the area. So I'm gonna go with like $20 per square foot, and again I'm gonna add like $15 more just because it's the state of Washington. So the average price, the repairs should be close to like 60. Nah, I don't think it should be that much. Let me lower it down to like 30. So it'll be $15 per square foot. $60,000 worth of repairs. I don't think this property needs $60,000 worth of repairs. I don't think I can. I think we can get away with like 50. Honestly, from my opinion, I can definitely go with like 50 from here. Yeah, and then the reason is because of the basement. So the basement, it's a small basement. It's half the basement, but it's unfinished. And usually for the basement, it's gonna be half of the price of the square footage. So if we're looking at $25 per square foot in the living space, then it's gonna be $12 per square foot in the basement. So yeah, this looks more about right. 57,000. It's perfectly good in the repairs. And of course, I want to make my 20% profit because again, if we looked early at the investor breakdown example from the PDF, is the investor was projected to make 20%, but it turned out to be closer to like 12% ROI or 10% in the actual profit because again, there's a wholesaling fee. So that's extra things that the investors could be looking into. So again, this property needs to be, we gotta be, so we're looking at $265,000 of the asking. It's going to need roughly around $57,000 worth of repairs plus our 20% profit. We need to resell this property at $418,000. That's if we're to buy it right now at its current asking price. Are we buying at the current asking price? No, we of course want to negotiate with that. So we want to negotiate kind of close to like $185,000, which is almost it is $70,000 less than what they're asking. But hey, that's definitely like a good deal. If we were to get it to that plus do the repairs, then we need to resell and of course our profit, then we can resell our property for $313,000. Now, this is where I have to do my research on my comping and look how much are the properties actually going for based on the square footage, based on this area. Are the property selling more in the 300,000 or in the 400,000 range? So now it's time for some due diligence and let's check out what we're going to be able to find on this area overall. So let me go back to my search. Let me zoom into my area. Again, off the bat, we're able to see like West Buckeye. It looks like it's a street that leads to like a main highway or like a main road, especially with this small town. It looks like that's like it's really close to that. So Buckeye is again my borderline, and then it looks like Indiana Avenue as well too is gonna be my borderline. So let me look, let me take away this minimum or maximum price. Now let's look for properties that are within the range. So my square footage is 1902, so plus 300 is going to be 22. So max of 2250 and minus 1900 minus 300 is going to be 16. I don't have 16 over here, so it looks like I have to go down to like 15. So let me see, and also let me look for properties that are currently under contract as well too. So this is gonna be my area right over here. It looks like North Post is kind of like another borderline as well too. So I have this property 1504, okay, 2000, two-level home. This is not even updated. But our subject property is the three-bedroom, one bath, one level. Uh, one level? Oh, let's go through. Let me go through Street Viewer to confirm. Yeah, it's one level. So no two-story homes, because this one right here is a two-story home. Go back to like the beginning. You can see two stories. My property is not two stories. My property is only one story. And here's one, but this is, oh no, this is perfectly fine. 2165. So literally it's within that $300 dollar price range. I mean 300 square foot price range. And this is a great comp, and this is pending right now. So how much is it selling? This is selling for $192 per square foot. So let me put that in, 192. Let me just put that in for right now. Awesome. So that's one comp. This is one great comp because this is selling for 415, 31, 2165. Is it the same year? 1918. What year's my subject property? My subject property is uh 1920. Okay, cool. So that's one great comp, and that's pending right now too. So that's really good. Now let's actually look for what's actually sold in this area and what has sold in the last 6 months. So anything within the last 6 months. So I'm seeing a lot of 250s, 205s, 175. So as mentioned earlier, our first offer was possibly 185, and I'm seeing a lot of properties that are selling for 170. Sorry, how much was it? 180, 185. And I'm seeing some properties selling for 175, $200,000. So again, the property is selling for 265. So 200, 175, we're within our range as well too. But we got to see what's how much a lot of these properties are actually selling for. This sold for 318. That's two levels. This sold for um on November. Is it fully updated or what's the condition? Okay, it's in good condition. 340. This sold for 340 in November. The only thing it doesn't tell me what the square footage is. So let me do it, $340,000 divided by 1824. That's $186 per square foot. So let me go back to my comps. So 186. Awesome. So I have two comps now. One pending and then that one. Um, let's see. What about this one? November. Oh, February. February, February 2nd. 1902 minus 300. So this one meets it by a few square feet as well too. So this is a 4.2. This sold for 307 500. 1632 puts it at 188. Awesome. So we're really spot on. And if you guys remember earlier, our average based on Zillow was telling us that the average properties sell in this city for $371,000. And if you guys look at it, that's really close to our ARV based on our comps. It's really close to the asking price. So, like I was telling you, a little hack really helps out. Don't you can't just truly rely on it all the time. You have to do your due diligence. So that's why I'm doing my homework to actually find out. And honestly, I can say we can sell this property for between 360 to like 375. So I'm gonna push it to like 375 because again, um, our first property was $415,000. So I'm definitely gonna be able to push it. So now let's break it down to like on the investor side. The investor in there's gonna be our two investors. Our two investors are willing to purchase it between 205,000 to like $222,000. They play the closing costs, and this is how much they're making on their profit based on the 20% profit from there. So again, it's gonna be a little bit less because again, there's gonna be the wholesaling fee. But if I'm able to get this property for 185,000 and I put a $25,000 wholesale fee and I'm willing to negotiate, then by all means, it's still like a great deal overall. But again, the most I'm able to sell this property is 375, which so far, if I go back to this other calculator, let's break it down over here. The property is selling for 265,000. Let's say I get on the contract for 100. Oh, let's go to step number two. Step number two, how much does it need in repairs? We based it out at $57,000. Was it? 57, yeah, $57,000 worth of repairs. The ARV happens to be 375,000. Awesome. And then we pay like the closing costs. So now we have our price range or our offer range. I happen to get on the contract for 190 and resell that contract to an investor for $210,000, which is going to make it um, which is going to, oh, I get on the contract for $190,000 and I resell the contract for $210,000, which is going to make it a $20,000 wholesale fee right over here on the right side. And our initial investment for our end buyer happens to be 286 because again, he or she's going to be paying the closing costs. They're going to be doing the repairs for it. So the property is already listed at 70% below asking. We just happen to push it a little bit more from the ARV. When we resold it, again, we resold it for our markup, which we get a $20,000 wholesale fee. And then from there, our investor actual profit happens to be 55,250. And if you go down to the calculator, it's again, it's really close to that profit right there and then. So bam, this if there's an investor that is willing to get like a 19.32% ROI on a $286,000 investment, because again, that's how much they're initially going to invest. If we happen to get it on the contract for 190, then by all means, this is going to be a deal for them. And they're going to be making 55,250. It's probably going to take 2, 3 months for them to do the fix and flip this deal. It's not going to take a lot of work. So, and again, it's already priced amazingly. Even if we were to push it down to like what was it, 360? Even at 360, the property is listed at 73% below the ARV. So so far it's really good overall whatsoever. So this is could be like a great deal. I consider it like a great deal overall just because again of the light work that it needs and again how price is it's already from this area. So just great property overall unless there's anything else that it's hiding. That's why sometimes I like to check out, has this property being under contract? And if it has been under contract, like what happened that nothing. Oh, no, it hasn't been on. And it looks like it just listed 3 days ago. So honestly, great property overall. So this could be a definitely a great fix and flip deal. But I don't know how hot this market is in Spokane, Washington. So any buyers out there, by all means, take advantage of that deal right there. And we found some of the comps as well too. The comps are going for 192, 186, and 188 per square foot, which put it around 360. But again, we noticed that we know for sure it can sell for like 375, even higher as well too. Let's say even 415,000, because that was our first subject property. Even a 450, oh man, easily. Hell yeah. Even if I get under contract for $200,000. and they can resell it for 415 because there's a pending one right now for 415, 3 bedroom, one bath. Oh man, this is definitely like a deal. It's a no-brainer because we're getting really close to like the asking price, 230 and 250 on the price range. Man, it's a deal for sure. Guaranteed. It's definitely, this is an amazing deal. I would if I were to, well, I'm gonna try to find a buyer and see if I can do this myself, honestly, and see if I can get a private investor to help me fund this deal over here whatsoever, just because of that other one already going for 415. So it really depends on the work, man. But that's a great property right there, honestly and passionately. But now let's analyze some. Oh, that was pretty much our entire analysis from there. So if there's any questions, I'll leave it open for some questions. If there's no questions, then no, but I'm gonna let you guys unmute yourselves, and any questions you guys have along the way, just again go ahead and unmute yourselves. See if there's any questions. No questions? Nothing in the chat? No? All right. Well, looks like that will wrap up our today's meetup event. Thank you guys. I really appreciate you guys coming in for today. If you have any other questions, you can always reach out to me on meetup.com on the real estate wholesale analysis group. Any questions, you can message me through there. Or if you want to do some one-on-ones, I do have one-on-ones available on my website as well too, at eltonvargas.com. Any questions in terms of like investing or analyzing or comping, cold calling, marketing strategy, whatever it is I need help with on one-on-one, just set up a one-on-one with me. I'm available and just book it through there. I'll get notified and will automatically book you into one of my slots. But if there's anything else, then like I said, just reach out to me through those resources. And the next event will be on Wednesday at 6 p.m. Pacific Standard Time. So I'll see you guys there and have a blessed rest of your Monday and take care.